Hello and welcome to the VCA podcast. Today, I am pleased to welcome Mr. Ayan Desai, co-founder and director of Nalanda Capital Partners. What makes Nalanda particularly interesting is that it is not presented simply as a traditional investment platform. It is positioned as an ecosystem designed to nurture and scale ventures through more than funding by fostering partnerships, collaborations, and strategic alignment. That makes this conversation especially relevant for the VC audience, including investors, business leaders, and solution providers. Because at VCA, we believe that many of the most valuable opportunities emerge when the right people, capabilities, and ideas are connected across sectors and geographies. In today's discussion, we will explore Nalanda's strategy, why it is organized as a network, the benefits of multi-sector investments, and how examples such as Luminis, Regalia and Feedstocks, and CultYvate help illustrate that model in practice. Ayan, welcome, and thank you for joining us.
Hi, Christophe. Thank you for having me.
Before we speak about Nalanda itself, could you briefly walk us through your own journey and what led you into venture building and alternative investments?
Thank you for that, Christophe. For myself, I've been part of the alternative industry for over 2 decades now, having experience within international capital markets, fund management, private equity, venture capital, real estate, and have successfully built and sold platforms over the past 2 decades. A concept that was derived out of a conversation between a few friends who were initially connected because of real estate, myself being into real estate, private equity, and capital markets and fund management, and my partner and principal, Jeff, who is a large-scale developer out of Southeast Asia. While we were looking at this, we started evaluating what are the other sectors that we could work on. And then that's about the inception of Nalanda came about.
So what market gap or opportunity did you see that led you to position Nalanda Capital Partners as an impact platform?
I think to begin with, me and my principal, we were quite comfortable and clear about the sectors that we wanted to target because of our experience across real estate, Jeff having a lot of exposure in the plantation sector, and a few other things. So we had clearly earmarked the sectors that we wanted to work with, that being agri and food systems, energy, and also transportation and mobility. What we were trying to understand is to look at the developments that were happening across the board in these sectors, whether they were from a regulation or a governance standpoint, which included things like the SDG, UN Sustainable Goals, CSR for companies, RED when it comes to the EU platform for sustainability, EPA, which is the Environment Protection Act in the US, CORSIA, and so on and so forth. We were also following all the developments that were happening in the digital space, from B2C, deep tech, SaaS, AI stacks, etc. And finally, also tracking the flow of capital as they were trying to change allocations across geographies and asset classes. What we truly realized is that in each one of these spheres, there was innovation, waste management, and also a certain case of protectionism because of the current geopolitical backdrop. And that's the basis of Nalanda trying to look at impact ventures.
So Nalanda says that it nurtures and scales ventures through more than funding. What does that mean?
Correct.
More than funding. What does it mean in practice?
Let me try and explain this to you with a few analogies. I think the main objective that we are trying to bring over here is to have coherency between all the stakeholders. That includes the business leaders who are the experts in each of those fields, whether it be agri, energy, real estate, transportation, so on and so forth. The second aspect being the founders and the innovators who are coming up with products to make the businesses far more efficient and successful. The third aspect is capital, which needed predictability. As you would be aware that this is not a product, or these businesses are not products of hypercycles, unlike paper assets, which were fundamentally trying to just play the market cycles. What we realized is that here it needed long-term, slow capital, time commitment, and a lot of iterations to get these things right in the market.
So, at what point did you realize that a more outcome based model was needed rather than a traditional investment approach?
I think, leading from the previous point, when we were studying all the different sectors and all the developments across governance, digitalization, etc., what we found is that there is very little predictability, and there is very little things that really connect each other. What we found is things were working in silos. So let's say if we take, for example, governance and regulation, there is so much available in terms of the policies, but we found that there were multiple policies that were trying to look at resolving this problem. The same thing happened with digitalization. There was so much innovation that one did not really see where it was going, in the which direction it was going to be predictable for the investors. Then we studied out some of the other aspects that we were trying to put into place from a commercial standpoint, whereas capital was very simply saying that yes, there is enough capital available, there's enough dry powder, but it needs predictability. So I think then came about the real thing. When you look at any of these businesses, the most critical aspect of is the deep understanding of the problem. And the deep understanding of the problem comes from business leaders who have spent decades in each of these sectors. And to be able to establish any product, market, solution, service that was going to be able to help improve the quality for these business leaders, we realized that it was a continuous and iterative model. A lot of founders had ideas, but they needed incubation. The incubation then needed a product stack to come in. That means you needed to put your entire technology platform in place. After that, you needed to put it into trials, which are iterative. So you can firstly establish what the problem is, and then based on that, continuously build solutions that then stack up to it. Once you have that in place, you can then parallelly put that in terms of a company for the service from a unit pricing perspective, to a revenue model, to the business model, to the commercial model, which eventually gives you the right amount of capital that would be required for this. Having said that, I think the real issue comes down to the ability to understand how deep the problem is and how long it has been. And to find a solution to that was not something that was going to happen just by any plug and play model, because there wasn't one. And then what we observed is there was a lot of burn of capital across sectors, which is not something that our set of LPs and associate investors wanted to be part of. So that is the fundamental essence, how Nalanda has gone into more of an outcome-based model and taking into account impact, as well as to try and see that it's commercially viable, not just from the founder or the business's perspective, but it also has to be commercially viable from the business leader or the client's perspective, because any replacement cost needs to have a return of investment and a timeline. So trying putting coherency across all these platforms is exactly how we came up that it needs to be an outcome-based model.
Right, that makes a lot of sense. So what are the practical advantages of that model for founders, investors, and suppliers?
I think in this particular case, you have to always look at it from the client's perspective. When you go to large organizations, be it in the agri space or energy space, real estate space, transportation space, these are companies or organizations that have been fundamentally working in these sectors for over 2, 3, 4, 5 decades and have immense knowledge at the ground level. The issue was to be able to put this problem to the new age founders or innovators who were looking at enhancing the efficiency, efficacy, and the effectiveness of each of the service of each of these sectors. So keeping that in mind, it was basically again trying to work in a circular fashion where you're trying to resolve the issue by going into multiple trials, trying and establish a clear product and solution that would then be viable across segments within that sector.
Yeah, so how do you decide what should remain inside a venture and what should be unlocked through external partnerships?
I think that's a very good question, but a very simple one. I think anything that has got to do with proprietary knowledge, whether it's technical, product related, formulation, service related, or anything that makes up the entire stack for the business, is what remains in the business. What goes out is a corroborated solution for the clients, which then they can implement and then come back to us whether it's working, not working, or any improvement is needed.
And so, and in your opinion, what are the critical elements to ensure outcomes and continued collaborations?
I think one thing I've already mentioned is the ability to understand how deep the problem is, and also for how long the problem has been existent within each segment in that sector. Having said that, you can then try and put a platform which can build basis of one simple thing: execute, execute.
What does Nalanda typically do that a traditional investor would not necessarily do?
I'm going to take a little bit time on this. If you try and understand any new business, it's basically founded and it takes time to establish itself. It goes from the stage of ideation to incubation to trying to put a little bit of technology stack around it, then trying to put some sort of costing around it, then trying and putting it into some few trials, and then you try and take it back again to the table, drawing board in a circular manner, and do iterations till you reach a desired state. Now, what Nalanda does in this particular aspect is to give firstly the market. So, because of our extensive network across regions, we can give these founders a solution for our clients. So, i.e., opening up the market for them and them guiding them through the entire process. Through this process, we help them establish unit economics, their entire revenue model, the business model around it, how competitive they need to be, and then to put a commercial model, because that also takes into account the supply chain factors, the cost factors, and all other elements. This then helps us parallelly, as the company is maturing from its different risk stages, we help them mitigate risk. The initial is incubation and ideation risk, then is technological risk, then is probably market risk. Once they are ready, they can have a clear go-to-market strategy for each sector, but also try and cover as many segments within that sector as possible. And eventually, if that's successful, capital and exit is the thing. So we basically, in essence, provide four things: market development, commercial development, risk mitigation, and capital and exit.
Yeah, so Nalanda's strategy refers to themes such as digitalization, decarbonization, and deglobalisation. Why are these themes central to your investment logic?
I think firstly, I would like to clarify that the way we look at it in Nalanda is to have the mindset of an industrialist, a manufacturer, or a real estate developer. You take a piece of paper and you put an idea on it that then goes on to multiple iterations before it can be something that been taken to the market. So having said that, what we eventually provide is a solution in the current backdrop, because if we look at decarbonization, it's a reality. It's a reality for urban air, it's a reality for groundwater levels, it's a reality for plastic waste, it's a reality for microbiome imbalance. At the same time, digitalization is something that has made life convenient across the world. I think it got amplified after the COVID-19 pandemic, but I think along with that, also what we have been seeing over the past half a decade is that there is a clear intent of protectionism across regions. While the solution is superfluous, we realize that these are the three pillars that we need to target, and these are part of our philosophy: decarbonization, digitalization, and deglobalization. Now, if we will look at it, we would then try and see what is it that we achieve out of it. Our objectives are very clear. We want to bring in something that eventually is scalable, has connectivity, innovation, and waste management.
And do you see those themes separate buckets or as a mutually reinforcing trend?
Our understanding around this thing has been actually twofold. When we look at it from a strategic standpoint and you study the policy that governs decarbonization or digitalization, I don't think there is anything that is mutually inclusive. But when you take a stack or a solution to any of your large clients and you try and operationalize it at the ground level, it is because you may put in your digital platform or your technology or your solution or your product or even your fit outs into certain cases to ensure that the same is helping, whether it's lighting, cooling, water, when it comes to energy, whether it's soil and water, when it comes to agri, or when it's emission controls and low carbon for biodiesel and fuels, when it comes to feedstocks. So I think at the operational level, we see a lot of synergy across the different segments of the business. But from a strategic standpoint, I think they could be mutually quite exclusive.
So when you're assessing a new venture, what do you look for beyond the pitch deck?
I think this is a very important question. I think there are two things that we see. One is the ability to understand the problem in detail, and second is to also understand how long this problem has been existing within each of the sectors. I think the second thing that we look at in more detail is the ability of the founders or the innovators to continuously deploy this across different segments within the sector, but at the same time have some amount of flexibility and adaptability, because I don't think there is one product that fits all markets. There is some amount of standardization, but also the ability to have customizations for the segment. I think that's something that is coming out of the strategy that we put in, which is more in terms of understanding the problem and then continuously doing trials to bring it to a point where the product is absolutely right for the market.
What tends to distinguish a good opportunity from a truly strategic one in Nalanda's eyes?
I think a good opportunity and a strategic one. I think all opportunities are good. It is the ability of these people to have the mindset of being a manufacturer or an industrialist, to try and put all the different aspects of the platform together. And I think that's where the opportunity comes in. And I would like to rephrase this, if I may. It's more as the what makes a good solution more than the opportunity. All opportunities are good. All innovations are good. All founders are good, but their ability to try and look at this from the client perspective to make it into a solution is what differentiates the ones that last and the ones that don't. And this goes back to what we try and told you first. It is the deep understanding of the problem and how long has it been persistent. I think that is what some of the largest companies in the world are trying to resolve today, through their platform or through third-party innovations.
That's a really good insight. All opportunities are good, and it's just what you're going to do with the opportunity that makes it extraordinary. So what attracted Nalanda to these ventures that we talked about, and what does it reveal about your brother strategy?
Okay. I think to make this very clear, the philosophy that we had around our entire strategy is the 3Ds which we've spoken about: decarbonization, digitalization, and deglobalization. Our objective that we wanted to achieve with these businesses is fundamentally got to do with your ability to waste manage, the innovations around it, whether these are fully connected through the platform or they are having scalability. I think when you try and put that together, we have been more in terms of manufacturers and developers purely because two of the three platforms are completely incubated and launched by us. They are bootstrapped and they are currently active across markets. The same thing goes for the third platform, which is Luminis, where we have a strategic alliance, but it is also bootstrap, and we see the founders having the same mindset to be able to take their solution and build it into a platform across segments within the particular sector.
And could you please highlight how these ventures distinguish themselves from competition?
That's a very good question, Christophe. I think there is a lot of innovation, there's a lot of products, there are a lot of solutions in the market trying to tackle each of these sectors. The ability for any of these ventures to distinguish themselves is again going down to how deep can you go into the problem, how long the problem has been, and how many segments of that problem that you can solve, which only comes down from multiple proof of concepts, trials, iterations, and continuous learnings that go through. And what distinguishes them is for these platforms, these ventures to become platform businesses that can tackle different segments because each segment within the sector has multiple or different problems. And I think that's what I think would eventually distinguish our ventures from some of the others in the market.
And so, what common strategic DNA do you see between Regalia and Luminis?
I would like to expand that by saying it's not just between the two ventures that we have, but it's also the third one that we are in the process of floating. It firstly comes down to the fact that you have to be able to bring about a baseline. What I mean by baseline is from a client's perspective again, that if you are going to any one of these big clients in each or any of these sectors, you have to be able to tell them by implementing a particular solution within that particular segment in that sector, they are going to be able to save certain amount of waste, they are going to be able to improve their yield or reduce their costs or increase their output. What that would eventually bring about is validations. These validations would then be the fundamental basis for the clients to understand the replacement cost or the return of investment. And I think that is something that is a common DNA across all ventures that we look at floating.
In a space such as feedstocks, where value depends heavily on sourcing, reliability, and partnerships, what role can a platform like Nalanda play?
I think that's a very pertinent question. When you look at specifically for business like feedstock, its fundamental clients are sustainable aviation companies, marine companies, it has biodiesel companies for transportation, it has other players. But the point is, when you are looking at this particular business, it is upstreaming the waste from all the downstreaming that has happened of core products that have come in. What that means is you have to be able to establish the tests and the which would then give you the technical parameters for each of these clients. And where Nalanda comes in is very simply to have trusted quality supply from supply partners where we act as distribution or financiers, and then at the same time to be able to give the right product to whether it's refineries or pre-treatment plants who then convert them into biodiesel or biofuel for as feedstocks for the other sectors in transportation, mainly mobility in cars, sustainable aviation fuel, or going further, hopefully fingers crossed, with sustainable marine fuels.
And do you see cross-learning between businesses, even though they may seem to sit in different parts of the market?
I think this is something which is pertinent to how strategically they are exclusive But when you look at the impact that each one of them creates, besides the commercial impact for the clients or the return impacts for the investors, I think it's their ability to bring in decarbonization, because every aspect that we deploy eventually helps in reducing your carbon footprint, whether it's large retail or real estate companies with massive assets, or you look at large agri companies with large or massive plantations or aquaculture ponds, or you look at the tree treatment plants who are then going to be selling these products as sustainable.
You may have heard of Porter's strategy, claiming that companies need to be focused. And some investors prefer deep specialization in a single sector. Nalanda, on the other hand, appears more comfortable operating across several adjacent sectors. But why is that?
I think that's a very good question, but this also goes back to why our philosophy goes down to the 3Ds. Yes, they are across different sectors, but eventually the problems that they're trying to resolve are pretty common. Now, having said that, each one of the businesses that we build eventually can have very deep ecosystem learnings, knowledge, products, platforms for that particular segment. So the investors could also be targeting that particular venture purely because there's a greater element of predictability of what is being deployed and what can be anticipated out of it. So for example, let me tell you old school businesses. If you're trying to set up a massive retail mall or an entertainment complex, or if you're a manufacturer or industrialist trying to set up, let's say, a new car company, it does not come down to whether you can make the car, because all industries have a lot of interlinkages from other industries which come in. So the ability to put that and try it as a business, so put the business model underneath, you can make sure that your product is right, that there's revenue model, and then there is the unit level economics. And this eventually gives more comfort to investors as they have a clear sight and predictability of what's being done. Kind of just reduces the burn that people have faced, and it's not been happy times when trying to fund innovation and new technologies.
So what are the benefits of multi-sector investing when it is done well?
I think from our perspective, we are not really pure investors, as I mentioned. We are more like developers or manufacturers or industrialists. We are taking each one of these things and trying to put in our capital into it so we can eventually come out with a business that is absolutely focused on solving the problem and how long the problem has been there and how one can move out of it. So while multi-sector investing is something that is pretty much part of it, you cannot look at these investments which are trying to play any hyper cycle as you see it in paper assets like crypto or equity or commodities in most cases. But I think it is something that needs to be able to play multiple economic cycles for a company to be successful.
And have you seen examples where insight from one sector became the missing piece for another?
Sorry for that. Yes, I think that's one of the biggest things that we have learned. Because we spend so much time across these different sectors, what we understood is that the ability of any business in this space to try and become successful comes down to the fact that whether you can do baselining. We saw that happening in first with the feedstock business, because if you look at sustainable aviation fuel, which comes from biofuels, there's a clear element of what decarbonization each liter of sustainable fuels would provide to these transportation companies, which is reduction of almost 88 to 94% for every air mile traveled by these things. And then we tried and implemented that across the energy sector, where there is a very clear baselining. And this is also driven by governance, because if you look at some of the countries, especially in your part of the world, there's a very clear energy baselining that if you're energy efficient, its rating goes from A to F. And then you can say, okay, fine, whether I'm efficient in lighting, I'm efficient in cooling, I'm efficient in water usage. So these insights were very helpful for us to then put in the same sort of a mechanism with our trials and listing for the agri sector. So yes, and there is interdependency and learning which comes, and it comes at the operational model.
And do you believe one of the benefits of the Nalanda model is its ability to uncover non-obvious opportunities that a more linear approach might miss?
I think that's something that's in the future. I would just humbly say, yes, hopefully, but not definitely. If we do continue to get it right across cycles, then I think then what you say does stand true. So potentially, yes. In absolute terms, currently, I think it would be too brave to say that it's definitely a yes.
Yeah. So for a VCA member listening today, what type of collaboration with Nalanda would be most relevant?
I would always look at it in this way. Currently, we are the kind of alternative people that are building our own platforms. I.e., each one of the ventures that we speak about that we are associated or building are bootstrapped. They are bootstrapped by my current principal and partner, or some of, in one case, the founders, and then we have strategic alliance. So I think what's going to be absolutely critical as we move forward over the next few quarters is the ability to develop markets in different regions. And eventually, when we do see the need to go to market for capital, that would be the right time to associate. So I think in short, there are two areas. One is market development, if there is the right strategic fit, and capital, if within your ecosystem there are people who want to invest within specific, in a company that is targeting solutions for a specific sector.
For an investor listening today, what kind of opportunities or strategic profiles would fit best with your platform?
The kind of ventures that we work with are not where you will get a overnight exit, unlike some of the more mature markets. I think this needs the mindset of somebody being a manufacturer or a developer or an industrialist that understands that it is slow, private, long-term capital, which will, when deployed across stages, would eventually give you the right valuation or exit that investors look at.
And for a supplier, an operator, or a solution provider listening today, what makes someone genuinely valuable to Nalanda beyond simply having a product or service?
Okay, let me try and answer this one in a little bit of a different manner. We currently, with these three platforms, are serving, the sectors in transportation, the sectors in agriculture, and sectors in energy, which are massive in its play by itself. So if there is any supplier who has a novel solution, and if we think we can associate with them and provide them as a stack of solutions into a number of trials that we are doing across different regions in Southeast Asia, GCC, South Asia, India, China, some other parts, and I think that would be an opportunity that we could look at. Having said that, it has to be also something that merges with our current set of solutions that we are looking at giving to each of the sectors.
Where do you see the strongest potential for cross-pollination between Nalanda and the VCA ecosystem?
I think this is something that probably is not to be answered only by me, but by yourself also. I think the one thing that we are trying to attempt and trying to implement for our set of people is to try and bring in coherency between all stakeholders within the ecosystem. And I think that would be more of a strategic fit, in my view, than a point A to B a simple listing, whether it's a solution or a capital raise or a market or any other aspect of it.
So what kind of conversations or introductions or partnerships would be most useful for you at this stage?
I think currently our focus is go to market because we have done a lot of work over the last 3 to 4 years with each one of our ventures. And I think it's the biggest thing that we are currently working on over this next 4 quarters.
Thank you very much.
Well,
What
pleasure.
comes through clearly is that Nalanda is not thinking to be just another investment platform. It is building an ecosystem in which ventures, investors, and strategic partners can reinforce one another through collaboration, market access, and shared intelligence.
Yes,
For
that's
the
correct.
VC audience, that is especially relevant because many of the most valuable opportunities do not emerge from linear thinking. They emerge when the right connections are made across sectors, capabilities, and geographies. Thank you again for joining us, and we look forward to continuing this conversation.
Fantastic. Thank you for having me, Christophe. It was a pleasure.